is how you're going to use a higher time frame context to know exactly what lower time frame you should be using to look for an entry. On your higher time frame, you look for your break structure. Here is a high, here is a break structure, and you draw your zone. Now, if price is retracing a lot to get into this zone, as you can see from when we left the zone here to when we retraced was a big movement, do not use such a small time frame, okay? You're likely to get faked out. In this scenario, use a bigger, lower time frame. In a situation like this, again, we get a break structure, we get a zone. We can see price barely left the zone before retracing. On the lower time frame, you're not going to get much structure from here to here. So that is why you can go to an even lower time frame and look for confirmation in this example. And let me show you on the charts. For example, here we can see price is clearly trending higher, and we have a break of structure here, a protected low here, giving us a zone from here to here. Now, if we look at the retracement from this high to here, it is very minimal. I need to go on quite a small time frame to see structure here. Going on a time frame similar to my higher time frame, it's going to be exactly the same. I can't work with anything. But if I get a move like this, where we have a break of structure, we draw a zone from here to here, I can see perfect from here to here, we have quite a big retracement. So going on too small of a time frame, I would definitely get stopped out before we get the real move. Here I can go on a higher lower time frame, and this is the better thing to do. Now, you need to be using the right zones to look for your lower time frame confirmation in. If you want my free guide on how to find high probability zones, just comment the word zones and I'll send it over to you.